We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, everybody. Welcome back to the Capital Mindset live stream show. It's been a really long time since I uploaded or anything like that. So, yeah, here we go. As times get busier, I just have to adapt to that. And, yeah, we'll see how it goes. But I try to do these when I can. And with everything, I guess, going on. It's been really exciting past couple weeks. For those of you in the Discord community, you guys know how exciting they've been. But, yeah, other than that, I guess we can get started. But if you guys have any questions, actually, let me make sure that this is actually working. Hopefully it is. Let me see. All right. Let me do this because usually I have to enable that. Oh, there we go. Awesome. All right, fake memes. How's everyone doing? Julius says Fabio is capping, bro. Yeah. Oh, no. Let's not bring in that stock, whatever the MMTLP. Isn't that stock up like 700%? So let me actually check that. Let me share my screen here. And, well, I need something to share, but let me quickly open this up. MMTLP stock. Yeah, it's something like crazy. I've been seeing Strongman's coverage on it. It's pretty funny, I'd say. Yeah, right here. So, okay, so today it's down 15.15%. I have done no research into this company, so I can't really comment on it. But from what I've gathered, it's some special circumstance that's going on, and a lot of retail investors are getting behind this. There's some interesting content creators out in the ether who talk about this, and there seems to be a decent following. I don't really know why, but, you know, I'm not educated enough on this. So, Fabio, can we ask you a personal question? What's your overall button? Well, you'd have to just guess on that. But yeah, I guess you're wondering. But use your imagination. I could be extremely impoverished. You don't know. These people let me have in my comments section Captain Minds. Where's Fuhat? Where's Fuhat when we need him? All right. But anyways, so by the way, if you guys like this live stream, feel free to leave a like, as Air9 says. Liked and rude. And also rude to everyone as well for the call sign. And MP, I see that you always do like the introduction with Kevin O'Leary. Not Kevin O'Leary. Oh, my God. Bill O'Reilly. Oh, I'm thinking of Kevin O'Leary because of everything that's going on and how they call him. I think, what do they call him? Scam O'Leary? Something like that. But anyways. The answer is yes. Fairly reasonable investor. Yes. The answer is yes to that. Day traded metamaterials. Oh, gosh. Fabio, when is a recession? We've been in recession. Thoughts on open chat AI? I saw that, and disrupting Google, nah, not a chance. I feel like that's greatly over-exaggerated. Capital calculus head. Oh, yeah, because of our discussion earlier about calculus. Well, let me know how your homework went, Kronar. He's on track to a fairly reasonable retirement at... Anyways, so I'll set the portfolio to basically update. To be fair, there's not much that has changed as far as public equities goes. There's basically one or actually two new additions to the portfolio that are of note. As far as changes that I've made in terms of selling, I didn't really sell anything yet. And other than that, just because I have some things that are on the chopping block, some pharmaceutical company that you guys know which one it is. It's on the chopping block. A couple other stocks are on the chopping block. Other than that, not much has changed. Like I told you guys, I'm a fairly boring investor as far as like movement goes. But there is a position that, you know, those of you in the Discord community know what it is. Makes up a sizable holding. It's part of the phase 2 investment strategy for the portfolio. Overall, the portfolio has actually done really well. I shared this morning with the community the performance as of yesterday's recording, although after today, the performance is actually probably even better. But yeah, other than that, performance is, decent relative to the market, especially. But I'll share that with you guys in just a second. So what I kind of want to go over is, let's begin first with the actual portfolio update. So I'm going to actually enable the update, and give me a second. And then it should update right now. Oh, wait, I forgot. I got to go equals. There we go. All right, cool. So portfolio update has been enabled, and I'll kind of share my screen here. You guys can see it, updated as of today. I believe all brokers have reported in, but I could be wrong on that. I'm like 90% sure all brokers have reported in. And all off the top of my head, I'll tell you the ones that are of note. So the ones that are of note are... where is it? I'm trying to find it with my eyes. Anyways, you know what? Let's just go down the list. Nothing's changed with Meta Platforms. Meta Platforms continues to be now the largest position in the portfolio. We're up 15.61%, brought down the cost base a lot. That was a big shocker. You guys remember when I did the quote unquote the last portfolio update, which you guys voted to bring back. It was because I was shifting strategies. And yeah, and then there's Netflix. Netflix is continuing at its size, performed really well this year. Meta now has performed pretty well, but we'll see how that goes. Alphabet, nothing's changed, just small nibbles here and there, like really small nibbles. And then Perion Networks, nothing's changed there. Intel Corporation, nothing's changed there. Activision, nothing's changed there. Although we'll pause there and put a pin on this because let's talk about the commentary, what's going on. Am I worried about the acquisition not happening? And not really at the end of the day, because if I'm stuck with the company, I'm stuck with the company. It could be that, it doesn't go through, but of course Microsoft is going to be fighting it because it's a big deal for them. And they've just actually struck some agreements with Nintendo and Sony to kind of be neutral on the Call of Duty front for video games. Another news about Netflix is that, of course, they're going to be entering AAA title games, and that's something that they're kind of expanding into. Really excited to see that. You guys just asked me about OpenAI and Alphabet. Not really too concerned overall with that. Intel's performed okay. Of course, the price that we got it is pretty good, but we'll see in the future. Fidelity National Information Services. This is what I was trying to find with my eyes, and I was struggling. But yeah, I've added this one to the portfolio, and that was one that we discussed last week. Well, I kind of spoiled it, quote unquote. If you watch the live stream with Jay Nagy, we get into this one a little bit, and it was a stock that I actually texted Jay Nagy the week prior because it was something that was up his alley. And yeah, it made it into the portfolio. Happy with the position thus far. Looking to accumulate more if the opportunity arises. Probably could actually expand to a size a bit bigger than Global Payments, in fact, but we're kind of seeing in line with there. Unum Group, I'm about to reduce the position quite drastically. A decent chunk of the position will be, I guess you could say, taken away from me at a strike price, I believe, of $35 per share. But the remainder of it will be sold at the current price. I think at the $35 a share, the gain is still tremendous, and it's all going to be long-term capital gains, so great on the tax front too. AbbVie's the other one that's on the chopping block, done really well with this one, and it's done nothing but good to me. It's provided a lot of dividend income that was reinvested elsewhere, and also as far as capital returns goes, it's also done really well as well. Airjet Rocketdyne, this one's been making some news recently. I posted this one in the community this morning, but the news is actually old. It's from yesterday. So they're actually getting a lot of interest from different buyers. And again, these are the videos that I've made on the channel that seemingly just, they just don't get views because YouTubers or the YouTube audience doesn't really care about those kinds of videos. Although I got to say, from the capital mindset community, as far as like discussions go, it seems to be very popular. So Airjet Rocketdyne, they're being acquired by, they're yet to be determined on who's going to acquire them. All we know is that there's a lot of bidders. We have L3Harris, General Electric, and a couple private entities that are all bidding right now. Supposedly, according to reports from Reuters, L3Harris has expressed extreme interest in the deal. So we're probably going to get a very favorable outcome. I don't know where I'm going to deploy the capital, but yeah. And then we also have Markel. Nothing's changed there. Dropbox, nothing's changed there. Wells Fargo, nothing's changed there. I think I nibbled a little bit on it, but nothing big. Wasn't really a focus of mine. Realty income, nothing's changed there. Oh, I think my Roth hasn't updated because where is ADC? Anyways, ADC should be in here, but it should be very small. Yeah, it's kind of like a meaningless position, but it should be in here. It's not in here. And then I knew one of them was mistake. Always the Roth that gives me trouble. LYB, now that one, nothing's changed there. CE, nothing's changed there. Truist, nothing's changed there. In fact, won't waste your time. Nothing's changed on any of the ones below. Although kind of on the news segment side, the update on Warner Brothers Discovery kind of trimming the position is from past live stream updates or portfolio updates. But yep, that concludes basically the core side of this portfolio. So other than that, yeah, that's pretty much it. And let's see on the other side. Okay, so this is the speculative side of the position. You can kind of see actually once we got rid of the more prominent one, which I actually should have been gotten rid of because it was already updated that we sold it, but ASPS. So ASPS has come down since we did sell it last time. We sold it at a very good price point in the 16 range. And the returns have been incredible on that position, but we rolled that over into other holdings. Again, some of you may know what that is, but anyways. So then there's also CXW. CXW is the newest addition to the portfolio. We are down on the position 1.32% so far. Small relative to the portfolio. Still on the speculative side, basically real estate. If you want some explanation as to why I'm invested in the company, I refer you to a video I made a while ago about CXW and GEO Group, and a lot has to do with the valuation of the real estate, the underlying properties, and kind of how or what they're trading for. They're heavily discounted because of what they are, which I think is unfairly so. I chose CXW over GEO Group as, again, I refer to you to the video. Nothing in that video as far as information goes has changed since today. When I do a video, I try my best that the video will hopefully last a long time because I'm not the type of person that likes to make constant videos and build a quote-unquote community around a single stock. I could care less. I want to make money, and that's about it. And as far as time commitment goes, I'm not going to waste my time or waste your time constantly updating you about a stock and making you obsess over a stock, which, by the way, none of you guys are, but I feel like that's just a waste of time if you're just obsessing over a single stock. And you fall into that trap of like what retail investors do, is like develop these cult followings. But anyways, nothing really has changed here. NCR was actually the one that you might have noticed has bumped up in allocation, and also the cost basis was ruined a little bit. So cost basis went up along with allocation went up because I bought more shares, and then CXW was added to the portfolio. Nothing's changed with MPW, still a speculative holding there. Coupang, still speculative holding there, performed really well. And Prosus, BABA, so kind of an update on the Chinese VIEs. The ones that I hold ironically will probably end up making money. And I am up on my BABA position and I'm up on my Prosus position. And again, you guys know exactly how I feel about these entities, but it's very ironic and it's for the jokes, it's for the fun. Actually, I should probably label them in the speculative investment classification as fun because I am having fun. And you might notice if you guys are in the community that how I'll talk about the sheep pump in a joking way. But yeah, I feel like, again, I will make a decent amount of money. I'll probably go on vacation with the profits from BABA and Prosus. Prosus was actually a really well-executed tax loss harvest with Tencent to Prosus, and I think the thesis has played out really well. If you guys refer to the older live streams way back when I did sell Tencent for Prosus, you can kind of see my thought process there, and it has played out. The delta in performance between Prosus and Tencent has been quite large. Again, because if you thought that it was based off sentiment on foreign investments, then you would want to buy the holding company that's a foreign entity because of how the market would perceive its treatment, etc. And of course, you're not going to get the realization of NAV, but you're going to get, you can get kind of close to it. But there was a huge gap or disparity between a net asset value. There was also some other details about Prosus doing some buybacks, and those buybacks are, not generally token buybacks, but yeah, so pretty good there. and that kind of covers the changes to the portfolio. Not really. There are no big liquidations or sales. I've just been basically deploying the new capital coming in and finding a home for it. There are other larger investments that don't count as publicly traded stocks, so they're not included in here, but people know what they are. I just don't feel responsible or comfortable enough talking about them on YouTube. And those have performed really well thus far as well, also contributing to the portfolio performance. So, and I guess you guys are probably wondering what the portfolio performance is, and then we will first answer questions. Okay, so let me go through some questions. Oh, I see someone is watching at 1.5 times speed. So, when you get here, when you get to us, we'll find out. Oh, yeah, 175% Palantir exposure. Yeah, that'd be nuts. All right, just making sure I didn't get any messages there. Let's see here. What's wrong with obsessing over the destruction? Oh, no. That's all fun and games. Obsessing over the destruction of TTCF. And let me pull up your comment here. So Tattooed Chef, I guess we'll quickly discuss on Tattooed Chef, because what an unfortunate CF. Almost spelled it wrong. It just kept going down and down and down. Look at the volume. The volume's just basically, my gosh, it's so choppy now. And to think people actually back in the day, and again, we've made content on this stock several times in the past. It's the crew that I run with as well, that they also have made content on this in the past, and it's no one saw it coming, but a lot of you guys saw that coming. You guys remember, I want to give credit to the community here, because you guys also saw it coming. You just don't make videos, so it's not like it's just the ones who make videos are the ones getting highlighted in this case. But a lot of you, plenty of you, are pretty well versed in investing yourselves. You have a lot of experience, and you saw this a mile away. And actually, that's why these communities kind of built up in the first place, was a lot of people who kind of saw this a mile away, saw the other people who saw this thing a mile away, and we all gathered together so that we could all talk together about stocks. But yeah, that's kind of how it happened. Okay, so hindsight capital. That's a phrasing, by the way, for context. Any new viewers, there's a larger YouTuber by the name of Joseph Carlson, and he said that his critics, they are hindsight capital. Even though I think we have a video way earlier on in the year, definitely not hindsight. He's not referring to me. He's talking about the comment section, because I thought mine was constructive criticism. But anyways, there was a video I made. You guys can go check it out. It's the portfolio reaction to Joseph Carlson. I said that he would underperform based off of the information I had at the time, and it looks like it might have been the case. He actually timed the bottom, actually literally perfectly on Meta, where he made a negative video on Meta, and that day was the bottom. It's still up on his, so he's a good indicator. But yeah, and we have a lurker. I've never understood the word lurker, but no, yeah, it's okay. Hey there, long-time channel lurker. Really appreciate the educational info and love the stream. Hey, thank you. Nice to hear that. So you're welcome as always. Okay, so we need hindsight capital merch. Yeah, but that would be so on the nose if we do something like that. But it'd be funny. If I did something like that, it'd be like for the gimmicks, the catchphrases and stuff like that. But I don't know. I know it's easy to set up and stuff, and it's like no cost to hold, but whatever. Capital Mindset, did you buy FIS because it's currently cheap, which it is, or because you think it's a great business, and why? Well, I think, for example, in the space that they operate in, they're a very dominant player, if not one of the the most dominant player. And at the same time, they are extremely cheap. Basically what they're priced for, when I kind of gathered, I might do a video talking about this, but from what I gathered from the research I've done thus far, they're basically priced for zero growth or very little growth going forward. And again, that is to say that the market's aware of what's going to happen or what is happening. And someone asked before, when is a recession? Well, we've been in recession for a while, but it's just, a lot of people didn't, let's say, realize it. Again, the theme of this channel's commentary throughout the year, if you don't believe me, that's what the videos are for. They're all up there. Just liquidity crunch, the term liquidity crunch, either in the titles or used in the videos, and me talking about them in live streams, videos, etc., on and on and on for quite a long time. It's kind of all culminating together. And it's really exciting because not only is it about talking about a situation, but also profiting from it. And that's, again, showing in the results. So I'm really excited about that because as we kind of enter this next phase, if my goal is to, again, profit from the information, then, of course, I have to position myself accordingly. And, again, some of you guys already know what those positions are and you know the results thus far, but, you know. All right. So, but yeah, just to answer your question in summary, it is a great business and it's very cheap. It's kind of both. And a lot of the strategies that the new CEO is doing, I agree with, and therefore I can put my money behind that. I agree with the capital allocation strategy of the management team. Surely TTCF will become undervalued at some point, given the rate of speed it's crashing. Maybe based off of, I don't know, sentiments, but no, quite literally, this one is probably a contender to go bankrupt, or maybe even go private. I don't know. I actually thought that Smile Direct Club would be the first to go under between Jeremy's picks. Like after Voyager Digital, by the way, after Voyager Digital. So I still think there's a good chance this one might go under first, but I don't know. At the rate that things are going, it seems like Tattooed Chef might actually beat that, and I'll be wrong, and it would be Tattooed Chef. But Smile Direct Club, by the way, it's quite a strong skill to pick 3 companies in a row that all will go BK or bankrupt. That takes a lot of skill. That's not very easy. I tip my hat off to Jeremy. That my gosh, he should go. I don't know. We should look at him as a counter indicator. And now he's switching over to. I still think the result will be the same. He's going to more or less underperform the markets over a long period of time, but he's going to now focus on large cap stocks that I already talked about and not really understanding the business models. He's going to shift over to that. Probably going to get better views in the adjustment, but at the same time, you kind of seen his performance on YouTube actually decline. But still, fantastic for what it is. The guy is absolutely lucky. He lucked out in life because I think otherwise he would have not been a very successful individual. So kudos to him on that. Jeremy should start his own ETF, would buy very puts on it. Oh my gosh. Yeah, that's starts his own ETF, and JFE needs to do the Wall Street bets, inverse yourself strategy. Yeah, whatever he thinks, he does the opposite. Yeah, I'd probably agree with that. Are you an addict like Jeremy? He has a real problem and he's trying to deal with. No, I would say I'm not an addict. I feel as though I've kept things under control. There are days I might not even look at the market, and I won't even think about the market. I understand, or I feel like I understand. I know what I own, and I'm content with that. And I don't, again, like just as I don't make or feel the need to make weekly videos about stocks I own or daily videos, God forbid, about stocks I own, that also kind of translates to myself in real life. I don't think, I maybe will keep track of some news updates, and I have like a filter that I use. It's actually even on my model that I can actually filter out by news for the stocks that I own. And, kind of glance through that and see if there's anything big. But other than that, nothing big should have changed. Okay, so we have some further questions coming up. We have something like Jim Cramer inverse ETF for Jeremy. Yeah, exactly. Bobby, he's going to load up on Meta when it's 200 again. I always need, as we joke around in the Discord, I need some exit liquidity. That's for sure. No, I'm kidding. 200 is not really the price point. Although at that point, I mean, gosh, man, I could retire at that point. But yeah, at 200 for Meta. No, like guys, but I personally think that Meta got to a point in time where it was, just incredibly cheap. But that's my opinion, and I could be completely wrong on that. So I've been hiding out in SHY for a bit. Could you explain why shares site says it has a 4 yield dividends or half that amount? The data they're using is incorrect. That's all I can say. I don't really know the website you're using. iShares site. Oh no, that's iShares. Oh, that is strange. I don't really know why that is. I'd have to look into it to kind of come with a better answer. Maybe someone here knows the answer to that. Every stock YouTuber eventually turns into a degenerate. Yeah, that's because they make money. Okay, this is how the average stock YouTuber turns into a degenerate, because the way they make money is not from their investments. The way they make money is from YouTube. So that's why. And I've kind of ranted on this in the past, but Jeremy, Kevin, all of those guys, not you guys, but, you know, metaphorically, you guys, like YouTube, you guys created them and you guys fed the beast, but not you guys. And so they're just doing what you, again, not you guys, but you want them to do. YouTube tells me what types of videos to make. Do I do them? No. If I was doing the videos that YouTube told me or recommended that I make, it would be quite literally, my channel would be filled with Bitcoin, Tesla, Palantir. I've seen, you know, occasionally some other stocks come in there, Coinbase, and it filters out by like high interest, but it's always like, you know, complete weird stocks. Intel's another one, by the way. AMD makes it on there a lot. Micron makes it on there a lot. Warner Brothers Discovery made it on there a couple times. I've seen it. I think it's still up there in the high, but not as high. When FTX came out, how many FTX videos did I make, for Pete's sake? I mean, some people made a ton of FTX videos, because if you notice, and I'll be up, you know, I'll just tell you guys on YouTube on the back end, it's saying make a ton of FTX videos. And so not by coincidence, you'll see a lot of creators make multiple FTX videos, because that's, again, what the algorithm is telling you to make. So, but the algorithm is only telling you to make because that's what people are interested in. So it's you know, feeding itself. But yeah. So that's basically how you would say a YouTuber becomes degenerate. But at the end of the day, they were always needing to become degenerate because this is how they make money. And, you know, kudos to whoever. I'm not going to, you know, dog on someone because they want to pursue a path and, you know, try to make money, try to better themselves, etc., or whatever we want to say about that. You know, where we can draw a line is where it starts to, you know, accrue like harm to someone, or you're trying to swindle someone for something. That's like a hard line to there, because that's where the fun kind of ends, and you're involving someone else's well-being into your well-being. But yeah, you're benefiting your own well-being at the expense of someone else, which is not okay. Okay, so, but yeah, as long as I intend to make money from my investments, it would be to my detriment to then become degenerate. So at least it'd be quite difficult for YouTube to compete with my portfolio. Yeah, let's see here. Honest question, do you prefer FIS over global payments? I thought GPN was more undervalued. So GPN was more undervalued until FIS's downfall. So let me kind of pull that up. And I feel like I'm always the type of person that my mind changes when the facts change. If the facts change, my mind changes. I feel like I am a pretty open-minded person. And yeah, you can kind of see here. So this drop area, which, by the way, I had a better cost basis and I kind of ruined it because I added up. So I'm waiting and seeing if it kind of comes back down to this level. But I didn't add at right here. I added more in this zone, and then I kind of added on this rally up here a little bit more. So my cost basis got a little bit higher than originally what it was. But I'm pausing now and kind of seeing and waiting to see if I get lower levels. But we might see that. I don't know. But GPN in this area, GPN was cheaper in my opinion. The facts changed. I changed my mind. And I felt like New Capital was more deserving to go in FIS. So they're kind of more or less the same sort of play, with FIS being a little bit cheaper, and that's how I'm playing it. I don't care about the dividend, but if you care about the dividend, it is a fun fact that FIS has a higher dividend yield. Both of them have pretty low payout ratios. So as far as both their cash flows and earnings basis, whatever way you want to measure it, that's pretty low. Right now, the GAAP net income looks pretty terrible, so you see a high PE right there. But again, look further than that. I implore you. It's not what it seems. Okay, so let's see here. Oh, you're noticing the north face? Yeah. It's actually cold in this room, so I got to wear this. Let's see. Fabio, why are you dodging my question on Remian sums? I'm starting to think I should ask your brother about math-related questions. Shake my head. Well, this is not a math-related channel. But I didn't see your questions by accident. But no, my brother would actually, he dominates me in mathematics. I mean, because he is pursuing his PhD in mathematics. So go figure. Haven't had a huge chance to look into BAM. Saw that Pabrai picked up a chunk in F13. Any surface level thoughts there? Well, if you go back to the older portfolio updates, BAM used to be a decent chunk of the portfolio. It was a core holding, or it was an ancillary holding. Point being, it was part of the portfolio. We exited because that was part of the whole theory or the whole theme of the liquidity crunch. And keep in mind, let me actually talk about this real quick because I see one of you's in here. Andrew and I were talking about this just today, actually. So all of these asset managers, they're kind of handling look no further than Blackstone. Blackstone's actually the one that kind of hit the news recently about the liquidity crunch. Well, I don't know if the authors might have used this, but how I've been describing all year is the word liquidity crunch. You might hear the word liquidity crisis. They're interchangeable. But anyways, Brookfield Asset Management, we sold it at pretty good levels, actually. Again, refer back to the older videos. And in fact, let me actually come here, and it should actually be, that is right. That is right. I got to find the live stream where I sold Brookfield Asset Management. I can kind of find it, and then I have to link it because I usually have links in the portfolio screens. Let me show you. These three are all in the same video, and I've just been too busy to go back. But I created this after the fact, and BAM, Honeywell, and Tencent are all in the same video. And I actually want to find the Tencent one because that's the tax loss harvest event. So it's really cool to go back and kind of hear my thought process about it, both for me and if you were curious about it. I try to make it easy, and this is a link usually to portfolio update videos. But in this video, when I find it, basically it's you got an interesting chunk of the liquidity crunch per se, and also kind of understanding where rates were going at the time. Rates were still continuing to rise. They only more recently had like a lower bottoming out recently. But point being, and it kind of made sense because I did have exposure to another instrument that was betting for rates to rise. So BAM and that investment were kind of opposites of each other. With BAM, one of the primary, they even say this, by the way, it's not my words, it's BAM's management. They compete with traditional investment vehicles. Traditional investment vehicles being, bonds, fixed income, stuff like that. And then they offer institutions or their clients alternative investments that might have higher yield, hopefully better risk reward. A lot of these asset managers, basically all the same for them. So with Blackstone recently having or pausing exit of their fund and their real estate fund, I believe, they're not allowing all the capital to leave. It's kind of a sign of like cracks in liquidity in the system. But again, all par of the course. So let's see through the rest of the questions. Oh man, Fabio is becoming an everything money light with FIS versus GPN. Oh no. No, yeah. When is a Schiller P video? I'll get to that. What he's referring to is Fuhat's been helping me out a lot with this, but he's been organizing the videos in the content library, and he noticed he's been watching basically all my older videos, Fuhat, haven't you? So he recalls that one of my older videos, I made a promise to make a video on the Schiller P and the downfalls of it, like an educational video. I'm up right now, but I'm not talking about my... Hello, Strongman. How you doing? I wonder what he's talking about. What could he be talking about? I have no idea. Go to sleep, Strongman. Have a good night. Baby bedtime. Need milky. I'm going sleeping. Oh gosh. Well, shout out to Strongman Personal Finance. I'm going to find the BAM video though. Oh, okay, yeah. If you find the BAM video, yeah, it's basically a live stream of portfolio update. Talk about Tencent, all those three stocks basically in one video. It should be easier to find if we kind of break it down by time frame. Like we see when what date this video was posted and what date this video was posted, we can kind of narrow it down. So. Yep. BAM is not buying TTCF. That would be funny. Okay, so Other thoughts, any questions can come in and I'll answer them. But as far as, let me actually log in and I'm going to basically kind of walk through my performance this far. Just takes me a bit to log in. Oh, I made a mistake with the password. Hold on. There we go. Okay, so let's see. Calvin Mindset, will you ever use M1 Finance the way it was designed to be used? Oh, what Bacon Memes is actually referring to is, so many of you may not know this, so I'll just let you know. I do have an M1 Finance account, but I use it in its worst way of, it wasn't intended. And it used to be $800 in there, but now it's over $1,000. It's not because I contributed, but point being, it's all one position. And yeah, so it's not, M1 Finance was not intended to be used in that way. It was intended to, kind of build your own ETF. But I only have just one holding in it. It's a very tiny portfolio, so, it's whatever. But yeah, it's all in one holding, 100% allocation. So, but maybe one day I decide to use it. I'm just not a fan of like the trading windows too much. I do like my freedom there. Do a video on Mara. All right, well, let me see Mara. If you have noticed, I've been lacking some time because of the CPA exams, so I haven't been able to make or post a lot of video content. I mean, the last post was 11 days ago, over a week. So yeah, it's been crazy. All right, so I mean, I can take a look at this. I don't know what this company does. Digital asset. Oh, okay, wait. So they're probably absolutely destroyed recently then. So they just hold. They're not a broker, are they? But anyway, I can kind of put together maybe a video kind of talking about this, some of the other crypto brokers all in one video if I were to do this. So can I buy Carvana? You mean you buy the whole of Carvana? Carvana is almost bankrupt, right? Last time I checked. I don't really pay too much attention to Carvana. Is this correct? They're down. Wow. That's crazy. They're down 42.92% today. Wow. That is nuts. Oh, Turning Points Brands. I'm aware of that one. Yeah, it's kind of like the Avant Brands company. Not the same thing, but yeah. All right, so as far as this year goes, again, this will be updated tomorrow, and it will actually be better tomorrow. But so as far as the 1 year from today, the performance is up 27.10%. S&P 500 is down 12.27%. And on the year-to-date basis, it's a little bit worse because of there's like a 1 month of period because I was kind of switching my portfolio strategy for the liquidity crunch around that time period. Again, go back and check out those videos. And, I talk about how I was making changes to the portfolio, basically sold a lot of my bank holdings, etc. But up 18.24% year-to-date, and total market or total return for the stock market, S&P 500, is negative 16.04%. And actually, even more recently, I posted this in the community this morning. More recently, the market's actually been correcting a little bit, just a little dent down, and the portfolio actually continued to rise. So performance has been actually improving because of the other investments that we've made. So it's been really well. And again, trying to prepare for what I joke around with as phase 2. I've already made at least 2 live streams about that. But yeah. Well, someone already, I didn't see that comment, Josh. Yeah, when will phase 3 commence? I don't know. I'm more or less joking with the phase 2, phase 3. And it was funny that Everything Money posted a video saying their version of phase 2 and phase 3. Those guys don't know anything in reality. If anything, like, again, we can kind of do this challenge. If this somehow gets to Paul, we can share our portfolio performances. We can see how each one has done over the long period of time. Yeah, we can go basically brokerage by brokerage, every single one. We can do like a video or something, and we can just go boom, 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 boom. But I doubt he would say yes to that, because he'd probably reveal that he's been underperforming tremendously, and he's selling everyone on a pipe dream. Capping on BXSL. Well, Fuhat, that's the Blackstone BDC, correct? If I remember correctly, it's a Blackstone BDC. And generally speaking, Fuhat, retail shouldn't even be involved in BDCs. Yeah, let me pull it up just for you, so you can't say I'm capping on it. Blackstone Secured Lending Fund. Okay, no, this is actually, is it a BDC? Yeah, I think this might be the BDC. So runs higher earnings estimates, nothing really new, high dividend payer. But Fuhat, I mean, you don't really want to. The yield chasing aspect of dividend investing is not ideal. Although maybe you kind of judge it in isolation relative to like where rates are potentially going to go. His tax loss harvest is so massive it would crush yours. That is true, actually. I bet that if we actually compared our two tax loss harvesting events, his would probably be a lot larger than mine, and I'm proud of that my tax loss harvest opportunity was not as large. That would honestly be one of the strangest flexes someone would have. Oh, my tax loss harvest was like, millions, and I'm like, oh, that's great. You lost a lot of money. Cool. But anyways, and just to stay on that point for a second, his strategy on the tax loss harvest with Baidu only worked by sheer luck. It's not very well thought out, in my opinion. I think in most people's opinion, it's not very well thought out, because those aren't necessarily correlated assets. They're only as correlated as, let's even say like as Apple is with Alphabet, right? There is some correlation there for sure, with the broader market, etc. But it's not a one-to-one. While I was kind of making a more educated bet, I believe. And I think you guys be the judge of that based on it, with selling Tencent and purchasing Prosus, which Prosus is a holding company of Tencent. And Prosus had experienced a larger underperformance to Tencent in the more recent history up until that point. So you could argue that I was at a better setup for outperformance of Tencent when I was buying Prosus. Again, once we have that video up, I will continue to just refer to that live stream and video for me to explain my thought process in the past. Okay. So the better tax loss harvester, Jeremy or Everything Money? Well, I don't know the position allocations or anything for EM. I know that for Jeremy, I mean, it's for the average it's pretty big. I think it's a loss of over $1 million. I think it's going to be a total loss on Tattooed Chef. Like, there's a very, very serious potential that it will be a total loss for Tattooed Chef. But yeah, talking on SoFi, by the way, I just want to mention this super quick, that SoFi, because this was a question that was asked to me. SoFi is a bank, right? There is a point at which you could probably make the argument that it is kind of a buy. It just depends on like management's treatment to shareholders. If you look at the SBC on SoFi, I mean, last time I checked, I could be wrong, but last time I checked, or how I remember it, it was decently egregious. And, a lot of people have an infatuation with the CEO. There's a lot of risks associated with what's on the books, the types of loans that they do have. And again, we've discussed that plenty, not going to get too much into that. But what you need to know is at some point, the discount to book is going to be enough that it actually becomes just an interesting speculation, if anything. But it's not as degenerate as some of these other stocks. So but this isn't no Citigroup where you have a discount to book, but Citigroup's a legit bank, or at least has, let's call it, less degenerate lending practices or less degenerate stuff on their books in aggregate, right? There are pockets of heavy risk with Citigroup, unknown risk, which actually is why there's a huge discount to book. But with something like SoFi, it's, kind of not the good exposure you want. The other stock that, remember, we played around as a game that, okay, if I was forced to short something, what would they be? One of them was Ally Group. The other one was Credit Acceptance Corporation. I am not short those stocks, for full disclosure, but it is a very rare moment for me to be short something directly. I might short something like indirectly, but very rare for me to short something directly. I just don't feel like I have the need to do it or need it to do well. It's just unnecessary risk for me. Bank of America. Let me check Bank of America. So you say it's taking a beating. And proves to you guys that I don't I don't check the markets every single day. Okay, I mean, relative to what? Okay, it's down back to $32, which actually is exciting because Bank of America is one of the more conservative books. Now, if you kind of think that there's going to be recession, again, I've already spoken my 2 cents on the banks that I want to have or build exposure to. They're in the portfolio. Just remember or remind everyone. Oh, by the way, the YouTube stock index. How is it doing? It's down 30%. Only 2 stocks are up in the YouTube stock index, and it's down 32% in the other allocation strategy. These are the stocks that I find are most talked about on YouTube. I will update on January of 2023. So we're close to getting onto the update. And then I will not reallocate, but add in some new stocks that maybe made it to the cut. I think SoFi Technologies is in here at a cost basis of $7. This is not real money whatsoever. This is all funny money, made up money, digital, whatever. I was the Federal Reserve here and I printed. That's a joke. That's a macro joke. But anyways, so the 2 banks that just to remind everyone is Wells Fargo, because we sold Citigroup. We sold Citigroup at an okay profit. And actually, if I had held Citigroup, now I would be in the red. So it was a good move. And Truist Financial Corporation. So 2 banks that I'm still up on, but Wells Fargo is the one I'm actually the most excited about if they get that asset cap lifted. And considering how I've come to the conclusion that Wells Fargo is the best capitalized of all the big banks, they should be in a great position if the asset cap is lifted to basically just swallow up the better assets from the other banks if the other banks get desperate enough. And then with Truist Financial, kind of a similar story, pretty good book. And Bank of America, I think, is pretty conservative. I understand why Buffett owns them. JP Morgan, Bellwether. I'm trying to think of the other ones. American Express, also high quality book as far as their actual lending practices go. Their credit card business is among the best, if not the best. They're usually tied with JP Morgan and Capital One. Capital One's not competing for the top 2, but it's still a good one. And yeah, Citigroup's kind of like the more subprime. Bank of America's, good, but not impressive. Wells Fargo's good, but not impressive. So it's kind of it. What the heck is Dropbox doing in there? Well, Dropbox is kind of the play on the change in how the workplace, or the change in the workplace, basically. And also, I do fully expect that Dropbox, as a performance goes, it's actually done really well. It's up 27.20% since we acquired it. I think that might actually be at market performance or slightly above market performance from the time period that we acquired it. When I say we, I'm saying me and my spouse, but this is not including my spouse's portfolio. So, but Dropbox, I actually have a suspicion that it might end up just getting acquired one day. And I'm answering the question from Trading with the Dummy. This thing stopped updating. Hold on. Let me just restart this widget. And we can go to add people's comments again. Whenever it decides to load. All right, there we go. So what is Dropbox doing in there? That's the answer to that. But yeah, Fred, I already answered that. So let me go back for the year. For 1 year, year to date, Fred. Because I said both already, but I'll say them again. I ask you, which one do you want? The year to date? Year to date is 18.24%. Up. Not down, up. All right, so question. Capital Mindset, you forced open an account and put money in it. Binance, SoftBank, Credit Suisse. I don't know. I'll pick Credit Suisse. Just randomly. Why that entity? Why are you asking that entity? You're giving me 3 random entities. Common mindset. What do you think about MPW long term? I have it as a speculation. I still have some questions about management trying to do what I feel like is, I don't know, some questionable practices, but it is what it is. We'll see how that goes. I basically just bought it just to throw money at it, and we'll see what happens, kind of for fun. With the full intention, I will make money on it. The yield is historically at a good price point or good entry point. There are some questions that have been, brought up by an analyst that there's the potential, for the F word going on at the company. We'll see how that plays out. So if it turns out to be the case, I'll take the L. But so far we're up. Longer term, if there's nothing wrong with the company in that sense, it's extremely undervalued. Extremely undervalued. But that's if nothing's wrong with it underneath. If there's nothing wrong inherently with their practices with one of their tenants and clients. So if there's no F word in there, F word means fraud, by the way, then it should be, decently undervalued right now. Okay, so I live in Nigeria with high inflation, went all in on Bitcoin at 60,000 USD. What would you have done different? I mean, I would have not had gone into Bitcoin. Although, if you are from Nigeria, then, like, for example, in Venezuela, the use case for Bitcoin is quite real. And so I don't know if that's the circumstance in Nigeria and that's why you decided to do it, or was it FOMO? If we invest in stocks, the government just takes our money. Okay, so you see, like that's kind of what I'm referring to then. So out of like necessity or desperation, you seek out other ways. This is something. So these nuts. If you are from Nigeria, I want everyone to kind of, or just not point you out in isolation, but anyone who's like in the West, take a moment to just appreciate the reality that you live in, because I say a lot. It doesn't have to be this way where you're allowed or able to participate in capital markets and generate wealth. It doesn't have to be that way. And in fact, in most parts of the world and throughout most of human history, it hasn't been that way. So again, it doesn't have to be that way. And I would say almost the case probably in Nigeria, very similar to other countries in the similar development levels. There is a very, very few who are able to participate. And then the rest have to kind of make do with whatever, and there's nothing really that they can do about it. So these nuts, I don't know if you, I like your name there. It's quite funny, but yeah, based and cap pilled. Cap is fluid. Oh yeah. By the way, for Fuhat, who basically is the bringer of the word cap. He uses it like he's saying cap is a fluid term for him. It could mean a lot of things depending on the context. It's kind of like maybe in your own local language, you might have a word that you kind of just use interchangeably for a bunch of things. And then it just depends on the context that the other person kind of listens to it and goes, oh, that's what that person means. For Fuhat, that's how he uses cap. All right. Let's go through some of these ones. Also, I've been asked about PayPal. PayPal is another stock that has come down. I have a video saying that, if it ever gets back to $70 a share, I'll be interested in it again. I believe PayPal hit close to, if not right at 74. So it's almost there. So yeah, I'll take a look again, or take another gander at about $70 a share and below. And yeah, I'll see. I'll kind of reassess the situation there. It's called a Fuhat. yes, bacon bombs. That is true. If you make up the meaning of words on the spot. So you must be holding Wells Fargo Corporation for long term. Yeah, for me, that's it. A longer term. Your take on AI C3, or you mean C3 AI? Well, C3 AI, I feel like, is the stock that everyone was investing in because they felt like they missed out on Palantir. Now I'd have to reassess it, but I'm not too interested in those companies. If I had to kind of make a broad statement here, the best product there, from what I've gathered, is something like a Snowflake. But the market all understands this. The market really understands that Snowflake is reigning supreme, and so therefore the market has put a hefty price tag on Snowflake. So is there an opportunity to generate tons of money in alpha? You know, Capital Mindset. I'm seriously thinking of swinging Carvana. Let the crazies buy it up until 6 and sell. Thoughts? That's from a trading aspect. For me, that I think of that stuff as kind of unnecessary risk for my capital. But also because that's not like my style. But although I have played, I've done some similar trades in the past for fun. I did this with NCR in the past. I have a video on it, and where it got too cheap, as well as Foot Locker. And I did a video when I bought and when I sold. So it's 2 separate videos. You can follow them through for their thought process. And then so the one where I bought, the stock price had recently crashed. This is for both Foot Locker and NCR, both on an earnings report. I think the crash was in excess of 40% for one of them, maybe 20% for the other. It was in the double digits for sure. And the point being, after the sell-off, the very next day, we accumulated some shares. I think for maybe NCR was a couple of days after. And then we've kind of bounced back on a recovery, sold them out. NCR now is back in the portfolio for a more serious, longer-term hold rather than, the short-term trade. So we'll see how that goes. But, it's worked out in the past when I've done it. I'd kind of say it's just speculation that maybe the sell-off is overdone, or there's going to be just a flood of volume, a flood of buyers all of a sudden who you're going to ride that wave, and they're going to be your exit liquidity. But let's see. Yeah, C3AI. C3AI is one that kind of got the attention because people associate it with as like, oh, the next Palantir. And when Palantir was getting a lot of fame, which, again, I have a video on Palantir. For full disclosure, I did have a position in Palantir back in the day, and I sold it to someone at a higher price. I made a decent chunk of change on Palantir. Although at the time because that was back when the market was way more degenerate. And actually, some of the shares were on the first day of IPO, fun fact. And I saw that we had a retail dominated market. There were some other plays that had worked out around that time period where I was basically taking advantage of retail excitement. I will maybe do videos. And when I do videos of those, like I did with Palantir, I'll show like the brokerage, like the buys and the sells and stuff like that. They're not like big positions or anything like that. They were more of, for me to have fun. I like to do that sometimes. I like to have fun. So yeah, it is what it is. But those worked out. And around that time, because I remember I was just, keeping track of Palantir, and I was watching retail sentiment. And actually, fun fact, for Palantir, that was the time where I would watch occasionally some YouTube videos on Palantir just to gauge how retail was thinking. And I was always so surprised how retail was, because if you go back to the video, I think one of my first sales was in the 30s. And keep in mind, like the buy price was in the single digits. So the gains were absolutely ridiculous. And then retail at the time when it was hitting the 30s was projecting out price targets. You would read in the comment sections, blog posts, you name it. They were saying like, $60 a share, something like that. And, I hindsight's 2020. So in hindsight, I should have sold it all in like the 30s around there when I first started selling. Because the last tranche I sold at around $19, $20 a share around there. So would have made the most money, but I kind of just like got in and then rode the wave up and then started to sell off over time. We missed out on some profit, but is what it is. Still made a good chunk of change. And the lesson there is just like, at times when I'm having fun, The thesis, I think, was still sound. It was basically like a retail-dominated market. There were a couple positions, like the ones I can kind of mention. If I do end up making videos on them, of course, it'll be for laughs too, because it's kind of funny how that happened. But Lucid, before me, Kevin spoke about it, was one, and the one that it was a fraud, by the way, just taking advantage of retail sentiment. Nikola was another one, really fun. No, I'm not a genius single trader. I don't do that. But the next one, by the way, that is basically in the same category, which I'm having tons of fun. If you're in the Discord community, you know I'm having tons of fun every time we see like a big swing rally in it, which is the Chinese VIE stocks. Look, like it's within my you could say style. That's like kind of the stocks I have fun with. So like, did I believe, for example, Palantir was worth what it was worth? Absolutely not. But what am I taking advantage of? Some underlying sentiment. And of course, not a core holding. I'm not a degenerate and irresponsible. It's to have fun. Turned out to be right. So with the Chinese VIEs, I think it's going to be like the same thing. I think that my thesis is more strained that it's a sentiment play. And a lot of the West does not acknowledge the true risks, my opinion. I can have a discussion. By the way, open invitation that if you have a YouTube channel and you talk about Alibaba, or you guys want someone who's bullish on Alibaba to have that conversation with me publicly, more than welcome to have that conversation with them. And we'll have the conversation live for everyone. Because I need to find someone that's truly on the opposite end of, you know, the sentiment on these entities. And I feel like that would bring out really good conversation points, because they'll have points and I'll have to have counterpoints to their points. And then we'll kind of get to the bottom of this as far as, what's going on with these entities. I feel like the broader YouTube community, it'd be good to have a video about it out there. But anyways, really similar to those. I'm having tons of fun with that. I usually refer to it as the she pump. Make tons of jokes, tons of memes about it. Usually with using like something like the Winnie the Pooh. So, but yeah, we have fun. You got to have fun in the market. You can't just be, super serious. And that's also like the good part about having community. It's fun. You get to know other people and you guys all joke together. And, some of you guys are real jokesters. I'll say that. Like Fuhad, you're a character. Like you're basically like a staple. I mean, like, look, the word cap is basically like your domain. Fuhad is tweaking. That's why you're saying Fuhad is tweaking. Go talk to who? I don't know who you're talking about. Yeah, who are you talking about? Okay, so thanks. I do think AI was hype, but the stock price is very attractive right now. I think Fubo would be a great swing trade, ? World Cup would help them get subs. Your thoughts on Fubo? I'll be honest. Okay, so I haven't really looked into Fubo too much. So my commentary there is going to be, unfortunately, a little bit dry. I do know, because last time I spoke to my father, it was around the topic of the World Cup, and Fubo TV was brought up because that's how he actually is watching most of the games. So he's a subscriber, and then I got to ask him, but again, I didn't look too much into the company, but he likes the product. That's not good enough research, but it might prompt some interesting points there. I don't know if what he's done is kind of something about the larger picture of Fubo TV. It could be. Like, I know that in isolation, I want to judge a stock on itself, not just because it's considered to be a meme stock, that therefore I dismiss it. I don't know if Fubo is considered to be a meme stock. I'm only saying that because I think Financial Education Jeremy mentioned the stock, and given his track record, it was like, questionable. But I would have to judge it in isolation. Okay, well, hey, Fuhat, for that individual, they're more than welcome to... I think if they want to have that conversation, we can have the conversation, but just let them know, and we can have it, maybe like a private one first on the Discord, like private as in like with the community, and then we can do a live stream or something after the fact. Because I know that person is, yes, they are bullish on Alibaba. So, Mr. Money. Inhaler first and type a comment second. I second that if that's what's going on. Yeah. Oh, I see. I just looked over at the comments. Yeah, Fuad going nuts. Oh, I love it. All right. Yeah. Okay, so yeah, if you let the person know that, you know, we can do like a live stream or something, you know, there you go. Because if they're really bullish on Alibaba, what I recommend if they wanted to watch like or do some research or background research on my opinions, you know, they can look at the content library and just basically, I mean, I think there's like 10 hours. There's like 10 hours of content right there. What's the latest with going on air with Robert Reynolds? So I don't know if he still wants to do that, Rob H. But if he does, I'm more than welcome to do it. Always good to have conversations with other people who are like to invest. And disagreements are like the most welcoming part because then we're not in an echo chamber. And I feel like that can provide a lot of value to viewers. More like a discussion of sorts or even an interview. But because interviews kind of can lead to discussion or kind of open things up to people. But yeah. No, it's kind of like I was having this discussion with someone else, and they're in the chat, but I still think I'm not totally like on strongman's side of being blackpilled in the context of YouTube finance about giving up on everything. I feel like there's going to be the natural filtration, and I still think that, you know, things are going to be good. Rob said he was not interested. Oh, well, that's a shame. That's a shame. Okay, so any opinion about SWBI? So SWBI, I think they collapsed today, right? Well, Andrew, if you want someone to go on air with, let me know. We can totally make that happen. Yeah, it's tough to find. It's tough to find people that you know, are passionate, because I don't really care too much about, like, that's not my main focus. It's like, oh, what's your returns or whatever. It's not about that. It's just, you know, having the good conversations, getting to the bottom of things, having that discussion, and disagreements are, again, welcome. But yeah, Smith & Wesson, I got to say, I'd probably refer to my older comments. Nothing's changed. Like I said, if I make a video, I try that video lasts at least a little bit, mostly because I'm also, you know, in that way saving myself time, because I don't want to do an update all the time on a stock. So I'll say my thoughts are pretty much the same thing, and we're just seeing it play out. Whoop-de-doo, you know? So a lot of the demand was brought forward, and you couldn't really trust a lot of the present numbers back then, and I bet you that's probably what happened. I haven't really looked into this, but if I had to make a bet on this, it's probably, you know, things are coming back down to normal. Let me just check on Google. I can just look down here. So so quarterly sales and net income are down a lot. Whoa, who could have predicted that? Crazy, right? So, thoughts on TSM? Fantastic company, well positioned for the future. Intel's going to be a competitor, but competitor is maybe a strong word in some sense. We'll have to see if Intel can prove that they can be an efficient competitor. Taiwan Semiconductor is building out fabrication facilities here in the United States alongside, and I think they are actually benefiting from the legislation or the subsidies that passed. But yeah, that's fantastic business. I think Warren Buffett bought them. I think he bought them for the right reasons. Just not going to be part of my portfolio right now, but yeah, no, overall solid company. Main risks, probably more sentiment around the geopolitical risks along with China. I don't think that's going to necessarily pan out. Personal opinion, could be wrong. We will see. Okay. Let's see here. This isn't a zero, though, right? What is a zero? Oh, you're talking about SWBI. Yeah, probably like there's some like cigar, but there's probably like one last puff or so in here. But yeah, it's not for me. It's not the type of play I like. What's your current outlook for or broadly for 2023? So I covered this in like one of the last live streams, but the more detailed stuff I provide in the calls with the community, but kind of just, again, broadly, strong, more moderately strong, like observably strong, or good looking holiday season, and then we start to see weakness. I think the timetable's been accelerated, though, based on what data we're coming out of services. So that's interesting. Something I've been, kind of getting intrigued by. I thought we had more time. But yeah. Did I sell my Rio Tinto? Yes, I did. And the Rio Tinto, and I'll get back to you, the question above that, but Rio Tinto, you can see here past investments, and Rio Tinto is explained in this video. So if you click on that link, it takes you to the video because they were all talked about in the same video. But with Rio Tinto, there are multiple sales, or there should be multiple sales. Where's the other one? My eyes need to find it. Oh, no, that's right. Rio was always the smaller one. Yeah, where's... If I don't see another Rio was always the smaller one because BHP was the one up here. Okay, so yeah, this is the video. You go to follow that, and it kind of explains... Not kind of. It explains why I sold Rio. Because these I have to put in manually. Sometimes I swear I had another Rio in here because I had a position and I sold it down to a watcher position. That's a mistake on my part. That's not the case. There should be an older one, unless I'm blind and I can't see it, because it should be closer to the BHP one. It should be around here, but it's not here. But anyways, you check that one out. That was like the most recent sale. Okay, so isn't a zero though? It might be something to look at. Dumpster dive. Yeah, it's probably at it. I mean, let's kind of see here, because who's to say it won't actually return down to these levels? I'd say if it got down to like the $5-ish range, I'd dumpster dive it. Yeah, I'd be taking a decent look at it. I feel like there'd be, I don't know, more pain ahead. Okay, so let's see for other questions. Fuhat SWI could be interesting around the $250 market cap, and so we're probably in agreement there, Julius. And that's kind of where I'd be willing to take on that excess risk for SWBI, but like I don't think they're going away, but I'm not interested in Rio specifically, but I'm in other miners, any mining stocks that you like. So normally I've been playing in the past, like the one that was the real winner for me was BHP. So kind of like these conglomerate miners. But, I think I'm interested in kind of exploring the copper thesis a little bit. I'd be interested in exploring that. The conglomerates kind of give you broad diversification, but you don't get that concentrated exposure into like one type of, thesis or strategy. So like Southern Copper Corporation comes to mind. There's a couple others. But yeah, that's kind of it. That's kind of it for the mining stocks. I don't really go into any of the small, tiny ones too much because again, it's not my area that I'm like super passionate about. Copper, why copper? Because just the sheer amount of copper that will be needed for the infrastructure going forward for like the next 10 years, the amount of electrical output that the United States and the developed world need to kind of expand upon in order to sustain an infrastructure of something like electric vehicles. And with copper, from what I've learned, it's difficult, time-consuming, and expensive to set up new mines. So it's not something that can just be, started all of a sudden. It takes some time. So you have that kind of delay and supply kind of coming in. So it is what it is on that. Okay, so what are your thoughts on Tupperware? Not interested in Tupperware. Tupperware is kind of like an MLM of sorts. So feel like, why would I? For me, I'm just not interested in those types of businesses, personally, speaking on that. But yeah, most mining sites take a long time. Yes. Unlike what a lot of people might believe. But when they kind of dig into it, they kind of figure, well, if there's not enough CapEx kind of being invested now, well, that has consequences 5 years from now, et cetera. So, mining as a whole and even oil exploration is kind of like a long cycle. Tup is an MLM. Yeah, last time I checked, I think it's an MLM. I'm thinking, yeah, Tupperware. Tupperware has like a strange little business structure, business strategy. I actually know some people who work decently high up in Tupperware. I don't know why. Maybe this area, they're just like, living in this area. But how have they fared? Let me see their ticker, TUP. Tupperware brands. Yeah, I don't think they fared too well. Yeah, they haven't fared too well. This is the company that I don't know why I would get involvement in it. Like, what's the catalyst for me? I get it. You're kind of dumpster diving at this point. Yeah, you're really dumpster diving in the stock. That's why you're asking, okay? Because like now it's kind of gotten back down to those lows. I mean, sure, it could move. The stock that I thought was cheap back in the day, I didn't participate in it, but there were several community members that were participating in it. It was Crocs. Crocs looked really good. And you can kind of get behind it. It's like, for me, I don't play into those games because I'm not really too keen on fashion. So I'm not really good at kind of telling those consumer trends. They're expanding into Target now. Okay, I mean, like that could have like maybe some more sales verticals, but opportunities in front of customers. It's just not, not for me. Now, let's kind of let's go through their website. I mean, like you're kind of with this, you're 100% like dumpster diving. Let's go to the investors page. 1.7 billion in sales. Woo. I want to just see how they're capitalized because I just want to say, where did I go? Where do you have it? I guess here. Quarterly. Let's just go here. Show me the balance sheet. That's all I really care right now. I just want to see like they're not in some crazy situation. Hopefully it's like, I'd imagine it's going to be pretty good. All right, so cash, 102 million. Okay, so I can kind of see like from a dumpster diving play, what's the market cap again? Market cap's like what? Yeah, 200 million. But I'd be very cautious about this because, just because it's there doesn't mean it's something that you can actually derive value for. Oh, yeah. Ooh. I mean, like, why would I feel like it's just more risk than I would be willing to take. It's just not for me already. Yeah, it's just not for me. I mean, it would take too much work and like I'd have to really believe in like what they're doing is game changing, but it's just not for me. They're priced for bankruptcy. They had to amend their debt covenants 2 more quarters at or below 4.5-ish leverage ratio. They default. Yeah, no, you're basically screaming to me like this is no, this is just not for me. Yeah, this is not for me. Sales isn't everything. In fact, some companies like Beyond Meat are better with less sales since they have negative. Yes, that is true. I don't know how a company does that. Well, I know how they do it. They sell it for less than what it costs them to produce, but to try to acquire market share, but that's insane. And to think, I remember when Jim Cramer was saying that Beyond Meat and Impossible Foods, they're like the future. He literally did. They are the future, bro. Kind of mean, but like unironically. Let's see. TA, that's the truck stop company. So this is actually, if you're into the truck stop joke, that was, I think, started by Jay Nagy and then made popular and famous by Strongman and the Rue Rabble. This is a must own. Just one share at the least for the laughs because it's a truck stop. Yeah. So I think it's just a funny stock to own. Oh, we got a super chat from Capital K. Let's pull this up. Thanks for the insight, Fabio. Great to have this kind of content available. No, absolutely. I'm glad to be here. I'm glad you're finding value in the content. And hopefully it's like a breath of fresh air from what's out there. But yeah, no. Thank you. TA, credit to Dan Weston. That is also true. Dan was the one who introduced the stock to the community because I did not know the stock even existed. And then Dan was like, "Did you know that there's a truck stop company?" And we're like, "Huh?" And he's like, "Yes, it is TA." And here we are. So now we are all basking in the glory of a truck stop stock that's actually performed pretty well over the past 5 years, and over the past max chart. I don't know if this is even real. It's kind of crazy, but I think it is real. So ignore that. Ignore that. But yeah, that's definitely the case. Let's buy Herbalife. Oh gosh, all right, that's another one. So GRNC, I think that's Generac. GNRC, sorry. Yeah, it's Generac. So Generac's another one that kind of roared up really high at one point, and now it's basically come back down to earth. So this is one that honestly would be worth taking a closer look at personally. So very interesting business as far as generators go, and one of the best, if not the best, in their space. There's other competitors. We can talk about that in the dedicated video. But now that it's finally come down back to earth, it might be worth kind of taking a look here and seeing, okay, what is it priced for? What happened? I know what happened. There was a bunch of natural disasters that really had an impact on both the sentiment and the sales. So that's the context that's missing from the massive run up. And then kind of as things calm down, we kind of reverted. At one point, I'm not even joking, I think the multiple was like 30 on this kind of company. There's another company that's adjacent to this, which is Cummins, CMI. So Cummins over here, it's actually, trading at a decent multiple. You're basically paying for more premium. Here, there's a lot more excitement going forward on some of the businesses that they're involved in. So again, you're basically paying for that in here, but you can kind of have more keep in mind that at least the business is going to execute more than likely, and they have the track record for it. Generac also, I'm not going to, dismiss Generac here because Generac's also a solid company, solid management team, etc. Historically good execution, and still over the 5 years, they are still, I think, that's outperforming the market over the past 5 years, even after this drawdown. Unlike ARK Invest. So those are my quick thoughts on Generac. So Generac is deserving, and I actually haven't paid attention to it in a while. I think we covered it in a in a private call on Discord a while back, but just kind of like introducing it, and I think it might have been around here, this level. So now that it's remarkably lower, it might be actually worth taking another look at. So, yep, I think that's interesting. I have one at my job. Oh, Generac, that's cool. So RIP charts looks like GRWC just won my watch list for weed play. Yeah, it probably looks like that. I think you're referring to Generac, not the TA. But no, Generac as a business, actually, it's finally come back down. It's worth another look, I'd say. But yeah. As far as my holding strategies go, I'm kind of still looking to concentrate more, selling some off. I don't know what I'm going to do with the proceeds from Air to Rocketdyne when those come in. I don't know what I'm going to do with those. Dropbox I'm not planning on selling. The ones I am planning on selling, I'm thinking about just getting rid of Qualcomm there. Keeping AMD, but getting rid of Qualcomm, just it's not meaningful at this point. It's not at a price that I'm super excited about. And yeah, that's the kind of ones. AbbVie, of course, like I said. So that's probably going to happen. Okay, so I have a backup Generac at my house. Yeah, I need to get one for hurricanes. For sure. Would recommend as a highlight. Yeah. As I highly recommend Palantir. It took me a second. I was like, wait, what is that? What is he saying there? But yeah, capital mindset. I thought we were both going to buy yachts with our HRD proceeds. No, we put it back in. We compound it more. We never stop. But yeah, I know we're both in the HRD thing, and it was funny when we saw the rumors, and then it was finally announced officially that they were in talks to be acquired, and everyone's like, whoa, they were like, people were joking, but they're like, inside information, and we were like, no, we talked about it. So it is what it is. Let's see. Seems like I've been waiting for GWW to fall for years. Oh, we also have thoughts on CRM. So CRM, honestly, has been one of the ones that, last time I checked with all the 13F filings, a lot of the super investors have been buying into CRM. So it's been a favorite. I got to say, from historical prices, it looks cheap. One of the concerns that even other community members have brought up was the stock-based compensation. So the cash flows look better than what they otherwise would be after you account for the actual cost. It's an actual cost of stock-based compensation. But as far as like the business goes, historically speaking, it appears cheap. You also have the likes of, let me just remember if this one is still kind of on the recovery mode. Yeah, because Splunk is a Cathie Wood stock that is since kind of transitioned and is still in the process of transitioning to more of a SaaS business model from licensed business model. Something that Adobe did way back when. For Adobe, it was successful. I don't like to put them in the same sense because I don't want to confuse people into thinking they're comparable, because they're not. But I point out because of the strategy is comparable. So it worked out for them. Intuit did the same thing. Intuit really pushed from licensing to SaaS, and that's worked out. They've even like made it more enticing. For example, if you go onto Intuit's website, you have QuickBooks, the desktop version, which is I think $7.99 a year, and then I think they have a sale going on. I know it's just because I was on the website. Just so happens I was on the website. It's not because I stock Intuit or anything, but so that's why I know that. But they have a sale going on for like. By the way, today's sponsor Intuit. No, I'm kidding. Wouldn't that be funny? Today's sponsor is QuickBooks, and it's down in the comment section below. Use promo code. What's a good promo code? Promo code QuickBook. Whatever. Point is, they've done the same thing. Promo code BACON. Okay, there we go. Promo code READ. All good. So you just bought CRM. So yeah, no. Like looking back, CRM. I mean, look how long ago we've seen prices like this. So on a comparative historical basis, it's cheap. We haven't seen prices since 2018. Very similar to where Meta got. Meta got into the price point where we hadn't seen prices like that since 2016. So yeah, yes, for QuickBooks. There's right now a discount for QuickBooks. So. The preferred shares, I mean, if you don't think it's going to go bankrupt, the preferred shares are probably going to be a better risk reward play for Curate Retail. It's just not for me. I don't like to risk. I like to call it or use the word unnecessary risk. So that's something that when I see someone do like let's say. One of the more recent examples, triple leverage short that we saw, what's his name, Saxana do with semiconductors, SOXL, I think, whatever it is. Point being, I feel like that's unnecessary risk. Why? So why? So unnecessary. But with Curate common stock, it's like a cigar butt investment. I get it. I think I looked at it, and it looks like if you're just judging it on the book value, I mean, it looks cheap. I think Burry bought it, probably similar reason. But if you're kind of if you don't think they're going to go bankrupt and you want like less risk involved, you can look at the preferreds and maybe still generate some capital appreciation if they're trading at distressed levels. But Promo code kick me. Okay, promo code kick me. Room to go down, I think. So yeah, Marcel, I'm exactly with you. That's how I really like to build out my positions. So I build out, like an initial position. You guys have seen this play out with many stocks this year. That's the beauty about the YouTube channel. Is like it serves as a vlog of sorts, and you guys get to see basically how I think about something over a period of time. And these portfolio updates, it's basically just me updating my thoughts. And like I'm telling you guys, you'll see how my positions change with, for example, Wells Fargo, Truist Financial Corp, heck, Meta, Google, whatever. But you'll kind of see that play out. So yeah, that's how I like to do it. So because it could rally from here, and then if it does, and if I was starting a starter position, then I'd be like, all right, well, that is what it is. I didn't get the price I wanted, but that's fine. Road starting to get closer to my buy-in price of 25.26. Remember when I accidentally traded Road? Remember that? On that, but yeah, I didn't sell out for a big profit at all. It basically broke even because I didn't sell the day after. The story goes like the day after I bought it, Road rallied pretty decently for whatever reason, and the group was saying how Road was rallying, and I literally messaged in the group. I was like, I'm too lazy to go to the computer. That was literally the only reason why it stayed. And then I sold the subsequent day. That, in dollar terms, that didn't cost me that much. I don't know if I say that number out loud, will people be upset? It's not that. I don't think it's that much. It's like it was like a $750 mistake, something like that. So, yeah, that is a decent mistake. And just, that's still like, a vacation or something. It's like a day. Where could I go on vacation for $750? I mean, you could do a vacation for sure, but like a short one, go to like, I don't know, another town, stay at a hotel. Yeah, your hotel cost. Why am I doing this math? That's not even a question people ask. How does your strategy differ during a bull market? Building out a position might cost you if it spikes up. Well, during a bull market, I mean, I've been through the bull market. I've been through the bear market. My strategy, my overall principles haven't changed. This is how I've done it for all the times, and I've done pretty good. So it depends on what stocks you're really looking at, because throughout the bull market, stocks aren't going up every single day or every single month, but they have good months. Like they have really good months, and then that ekes out the positive returns basically over that period of time. But yeah, I do build out large positions all at once. Like I did so with Meta. I did so with GPN. GPN didn't work out so far. I did so with Fidelity, a relatively short period of time. Within 1 month, it built out to that size. In percent terms, it's smaller. In dollar terms, it's, okay. But yeah. Do you have any videos / tips on incoming capital allocation, but inclusive for fund money / vacation money? Always feel guilty buying things other than appreciating. That's a really good topic in general just to cover, because I feel like that is okay, we all want to make money, and then what do we do with this money? We never spend it, because we all think the same way. In that way, it's like, oh, if I don't spend that money, I can compound it more and more and more. I'd say that as far as like incoming money, once the money's in the portfolio, I don't want to take it out. Truthfully, I don't want to. I will if it's like, I'll be straight up. With the VIEs that I have in the portfolio, like Alibaba and Tencent, or sorry, not Tencent, Prosus, the goal is recall to the videos I made recently about Alibaba, and they were negative videos, and then yet I was like, but I'm also doubling the position around that time period. And again, the thesis was the sentiment, and that the West truly did not fathom the risks associated with these entities. They don't really understand it. So I'll make money from those. That's my plan. And that I've segregated as mentally like, okay, once I sell half of the position, because when I doubled the Baba position, those shares are the ones I want to sell. The ones I bought at 109, I'm going to keep for a while as per the promise of the December video of 2021. And then we'll see how that kind of progresses, but I'll go on vacation with that money. So I do that sometimes. But like, for example, the money that I put into Meta, if I were to sell those in the future, it might be to buy real estate or something. So other things that, yeah, I appreciate. And what I'll do, for example, is for incoming money that I have from either, let's say, partnership distributions or salary, those I will segregate into a separate account, and then I'll spend that. That's how I'll kind of do it. But priority, of course, comes the retirement accounts, the still investing a good portion of all of that into the investment accounts. But I like to kind of segregate it from the incoming money and not take too much or not make it a habit at all of taking it from the portfolio. So the only money that really comes out of the portfolio is any tax obligations that have to be paid out. I'll take that from the portfolio. But no, that's a good video probably to come out, more of a philosophical. That actually, you know what? That's a really good one to have the Capital Mindset course episode 2, because I have episode 1 out on YouTube. And episode 2 actually could be on that topic. I feel like that's going to cover the basis for like, taking a step back for a newer investor, because people can get trapped in that. But no, really good question. Really, really good question. I didn't even put your comment up, unfortunately. So here you go, Justin. Okay, so Capital Mindset, what are your thoughts on Amazon? Oh, wait, I skipped over by accident. Sam Beers. Oh, yeah, no. Fuhat, yeah. We already talked about the Roth. Capital Mindset, thoughts on GPC? I feel like I've heard this name before. Let me pull them up real quick. Genuine Parts, of course. Genuine Parts. So Genuine Parts, I owned it for a split second, and I was impatient with it. And I did put this in a family member's portfolio, and they've done well. And it was actually, I feel stupid. But anyways, I bought it like literally COVID, and I sold it like the very next day. Made no money on this, and it just mooned. It just mooned. The yield at the time was insane, historically speaking, for Genuine Parts. But yeah, I like the company as kind of a cash cow. But if I'm being honest, also at the same time, it has outperformed the market. Very low volatility on this stock, historically speaking. I think they're a dividend king. I think right now they're also psychologically, you have to understand the reason why I mentioned why that happened. So psychologically for me, I'm looking at it, I'm kind of like, that there's that part of my mind that's like biased looking at this price, because I'm like, yeah, but, so I'm kind of kicking myself, and also like very jealous if you bought it and held it. And every time I log into the family member's account, I'm just like, whatever, good for them. So, no, I like the business. I'm not too keen on the valuation. We also have a question from JMac. What are your thoughts on Amazon at its current price? I thought about starting a small position, DCAing more if it goes down to the 60s. Amazon as a business, fantastic business, set to dominate the advertising space. Cloud business is still among the most dominant players. They're going to be focusing on cost-cutting initiatives throughout the next, let's say months or so. We'll see how that kind of pans out. Going forward, I think, again, a lot of their businesses are still going to, push, go on all cylinders. And really, Amazon's going to be, on the surface, a little bit more difficult to evaluate. But if you kind of break it down and really remove some of that growth CapEx that they're doing, and you don't punish them for that, it looks like it's at a decent price today, believe it or not. And, if you kind of having your own strategy kind of going into it, I mean, you could go worse with something like Amazon as far as a business goes. But yeah, just that strategy seems like you already have one going for you. Thoughts on Etsy? Oh gosh, the Amazon bear has come. No, I'm kidding. I'm kidding, Kingdom. So no, Etsy is another kind of niche player, and they dominate their space, no doubt. Kingdom, no doubt. I almost have to hate Etsy because of the joke now between us, but I don't hate Etsy. That's not true at all. I think that Etsy's a solid business in isolation. And again, they do dominate their space, their niche, and Amazon's not coming for that niche anytime soon. In fact, I think my wife wanted to purchase something on Etsy just the other day. Although for every one thing we purchase on Etsy, we buy like 1,000 on Amazon. just saying, just kidding. But also, like with Amazon, you're getting a bunch of other businesses that are not just one thing. Etsy also is going to get into advertising because, of course, as a platform that's, all these businesses, everyone's going to be an advertiser. So, let's see here. Playtika, unfortunately, I don't have any thoughts on them because I'm not familiar with them. So it'd be very surface level. But if it's mobile game developer, that's something I'm maybe interested in exploring a little bit. Mobile games probably over, let's say, the a recessionary period. I forget if mobile games are the ones that hurt more or get hurt more than the AAA titles. I forget which ones because one kind of focuses on that microtransactions and the other one, like, you're getting I would say a decent. I don't know. I forget which one. I want to say actually maybe the mobile games is supposed to help them out. So, because I'm thinking about the other larger publishers that all have mobile game divisions, and they talk about it in their strategy, kind of having an all-weather portfolio, so to speak. Okay, so please talk more about Salesforce. Seems like an attractive valuation. I should probably push out a video on it, Spornsburg, or we can talk about it on the Sunday call. If you bring it up, we definitely can just get into it. We can spend an hour plus on just Salesforce. Fund flows won't go into Amazon for a while, though. I think since it's in the consumer discretionary sector, it may see weakness. Okay, if it sees weakness and someone's going to want to accumulate, there's your shot. There's your shot, and you're really bullish. Thoughts on Kevin's index fund? I know it's almost like you want to say it that with the two letters, but yeah. So I think it's interesting to say the least. Probably going to underperform though, just like all the other stuff. If it does underperform, wow, shocker. Because of its high allocation to very, very expensive stocks, extreme high allocation to Tesla and to Apple. I have no idea what is the man's infatuation with paying exorbitant amounts of money. This man's not Warren Buffett, and he is not buying Apple at 2016 levels. So, yeah. Would love a deep dive video on it. Like, honestly, it's just about the time. Like, with me, it's like kind of juggling, the CPA exams, work, and kind of YouTube content, Discord as well. Because Discord, also takes a decent amount of my time. Because when I have like impromptu calls or like, the Sunday calls, it does take time. And unfortunately, something had to give, and it was, publishing very frequent YouTube videos. So, but we have fun with it still. Like, for example, these live streams, these are really fun for me. I love, getting here and getting to talk to you guys and stuff like that. So I would love some insights on how much of that post-lifestyle expenses is split between fun and investments, understanding that it'll be different for everyone. Yeah, no, it's definitely going to be, because it's definitely like a balancing act. When you're in your earlier stages of building, it can make a lot of sense to kind of really try to be scrappy and really build. And again, I think like kind of taking a step back philosophically for an investor, this is always what I say. You got to find what kind of speaks to you and keeps you invested, because that's actually the most important thing. With a caveat, because, let's face it, some strategies are very degenerate more than others. And if gambling is what keeps you invested, then, don't invest. But if you can kind of get past that gambling mindset and you can figure out what speaks to you, what strategy, are you kind of a more all-rounder investor? You invest in, kind of anything. Or are you a dividend investor? Are you an index fund investor? Whatever kind of makes you excited about it. Because some people generally are excited about index fund investing. Some people don't get excited by that, but they're excited by dividend investing. That keeps them focusing in the game. And then others are like, no, that doesn't, keep me in the game. I'm more of, just kind of whatever investor. And, that's cool. You have fun doing that. Because as long as you're focusing on making sure you're still motivated, or also kind of trying to being honest with yourself, and maybe you're not motivated by the right strategies, or at least hopefully you're self-aware. Not saying you specifically, this is broader YouTube audience. Maybe, in some cases, you're better off giving your money to someone else to invest it for you. That can be true too. Don't think for a second that the index fund investing strategy is quite literally applicable to everyone in the literal sense. And I have no motivation or incentive. I'm not a financial advisor trying to sell, like a platform or anything like that. It's simply saying that, I have to acknowledge that for some people, while index fund investing would be the most appropriate form for them, they're gonna do what statistically is more likely. They're gonna maybe sell when it's not right to sell, buy when it's not right to buy in the index fund. Because even then, when you see like how the average index fund investor underperforms the market, it's because of the actions they take. It's not the index's fault at all. The index is doing its job. It's the investor that's not doing their job. So, then that person has to really take a good hard look at themselves and say, maybe this thing's not for me. Maybe I need to go, make money elsewhere. And in this case, maybe I can't or shouldn't be able to handle. And also that's why the mutual fund option is really good too, because you have less, it's less easy to just liquidate and get out. While the ETF variants are going to take a little bit more discipline, but you get the added benefit of liquidity, but you're going to need a little bit more discipline there. Didn't mean to get into that whole caveat or that whole tangent there, but yes, microtransaction don't do well in recessions. Okay, so I remember it correctly, because I remember we were having that discussion in the community, Alex. It's a good value in my opinion. Honestly, we can probably take a look at it, because we have a lot of members that are really interested in video game companies. How do you feel about looking at the Activision purchase? So I talked about it a little bit before when I was going over the portfolio positions, but just quick repeat on thoughts. I'm not too overly concerned by it. One, because it's not something I'm betting the farm on. And two, if it doesn't go through, I have, I think, a good business at a good price. But if it does go through, great. Whatever for me. Seems way too good to be true. Yeah, the SBC is what I'd be a little bit more worried on. All right, so what are the advertising companies are the pillar of pricing power? Oh, we all know that advertising companies are the pillar of pricing power. So we'll do well. Yes. RY, I forget what RY is. Oh, Royal Bank of Canada. Royal Bank of Canada, like the classic that everyone goes to. I have deep concerns about Canada as a whole, like the banking system. As a bank, this is considered to be a good bank. As among Canadian banks, it's considered to be a good bank too. It's not as good as some of these smaller banks that we looked at. As a community, I think we all concluded that I think it was EQB Bank or EQC Bank. I think it's EQB. EQB Bank was pretty good, and I think we talked about it during one of the calls or something like that. But those are like more like a niche bank. I think like EQB is more akin to something like Bank of Ozark here in the United States. Similar in terms of like theme. And then Royal Bank of Canada, more like reminds me of a JP Morgan Chase for the United States, but in Canada. My biggest concern about Canada is basically how leveraged they are in the housing market, how a lot of the, basically the cost of living for housing is absolutely insane. And I think home appreciations have been like 500+%, while the average person, the United States has been like 182 over the same time period. And going into a lot of the loans, you can kind of see how many of their loans are variable, which is weird. Not weird to think about for Americans, because in the United States, we have the understanding that variable is bad because of what happened in 2007. But if you lived in Canada, no, historically, actually, variable has performed well. And I learned that today, speaking to fellow Canadians within the community. So you learn something new every day. And so Canadians think the opposite of Americans in this perspective, that no, it is actually good to have the variable, historically speaking. While Americans think no, it is bad to have variable, historically speaking. But yeah. Maybe we can add it to the. Oh, let's see here. We have a question about. Oh, I don't want to skip someone by accident. Thoughts on Suncor SU? Oh, sorry, I almost skipped Fuhat's question. Drink water. I will drink water after this. And thoughts on 10 stocks with 10% allocation each? Depends on the stocks. But yeah, you're basically saying I have no strong conviction in any of these, and then maybe you rebalance. Or maybe you say, like, I'm not going to presume anything. I just know that all these companies are good, 10% each, and then I rebalance accordingly. Maybe that's good. Kind of like an equal weighting S&P 500 thought process, but yeah. Okay, so thoughts on Suncor oil sands company, if not oil in general, currently seems that. So you remember, Adam, I think you've been a long-time listener. Do you remember the videos I made on me selling out of my oil stocks, what I believed would have happened? So what's interesting about my thoughts back then, I'm going to assume yes, you have. What's interesting to see how my thoughts were wrong and correct about back then was I was right about the demand destruction, at least as far as the oil price was concerned, but I was wrong on the oil stock prices. Oil stock prices remained elevated for a while. And so it goes to show you, there's mistakes that can be made. Of course, we'll see how things progress, because maybe I end up being right, as maybe they will follow the oil price. But ConocoPhillips was the larger one that you guys saw in the portfolio holdings, and it made up nearly 10% of the portfolio. And the thesis for why I was selling was, okay, well, oil is large part to cause of the cost push inflation that we saw. So parts of the inflation was supply shock driven and the cost push driven. So the cost push part largely driven by higher energy prices. And we kind of observed the changes in consumer behavior. Recall to the videos I made on Target, Walmart, their earnings reports. A little bit about also the oil companies too, when I covered those in videos and live streams. Kind of part of the broader theme of the liquidity crunch. When consumers reject higher prices, not because they're, saying, oh, I don't want to, it's because they can't. Because the necessity costs have risen so dramatically, and then that crushes their ability to spend on that discretionary. So that crush on that spend on discretionary will kind of have altering effects down the line into other parts of the economy, more the manufacturing sector, which then circles back to the demand on the oil parts. So when you saw that destruction in demand in the manufacturing sector, another good video that if you wanted to watch would be the videos on the chemical manufacturers, because when those stocks appeared to be cheap, think Celanese Corporation, Dow Chemical, LYB, Linnbissel, all these stocks, right? When they were showing very low multiples, the market was hinting to us as the investor, hey, there's probably something down the road, because we're forward pricing. The market is forward pricing that, let's say there's going to be a demand destruction. That's basically what we're penciling in. The good times are ending for these companies, and that's why they appeared so cheap. Well, how does that translate down the line? You kind of put these pieces together, it starts to make a lot of sense. Oil prices rise, or necessity prices rise, crushing consumer capability for spending on discretionary. That lack of consumer spending on discretionary starts to show up in Walmart, Target, all these retailers' earnings. You start to see them, hopefully, again, through the videos, we've pushed this together. Then you start to see that lack of spending there, the changes in consumer behavior, again, reported by those companies, slowly filter through into the actual industrial producers. Those industrial producers, they don't necessarily, they get priced for it, but they don't necessarily show it right then and there in their earnings, but they're becoming priced for it, and it's already starting to show up, like the little bit of the slowdown. And then that should kind of segue into back into oil. So oil should then taper off, as well as if you consider, additional things like China lockdowns. In broadly speaking, if you think there's going to be a recession of sorts. Well, we're in a recession, but global recession, lower consumer demand, again, demand destruction in the general sense, how that kind of filters through and kind of, cause a cascading effect. It's not about production levels rising or anything like that. It's for the wrong reasons. And I actually use those words exactly. So in the videos talking about why I'm selling out of oil, I say, well, if there is demand destruction for oil and energy prices come down, because the context was at the time, energy prices were rising a lot. And, the theme was among my viewers and everything is, well, energy prices are really high and this is really bad. And I hope energy prices come down. My commentary was, well, if they are coming down, which I do agree that they will come down, was that it would not be for good reasons. And that's exactly what's basically transpiring. So energy coming down, it is what it is. It's the demand destruction, basically. All right, enough of that ranting there. But I was trying to piece together, again, I'm referring back to those videos. Really good. I think they've aged well and, kind of pieces things together. But if you piece them all together, I often refer to older videos and live streams and in videos themselves to kind of direct the fuller picture, because I feel like multiple videos together kind of put the picture into better context. So it's again why we're working on the content library, because the content library makes it really easy to navigate. So yeah, if you are betting on Meta, I would look into Unity. Most VR apps are built using Unity and mobile games. You know what? I looked at Unity a little bit, but not in depthly. I will take your advice here, and I'm going to look deeper on Unity. JMac read an article recently that said ChatGPT might be a potential threat to Google's search in the future. Seemed pretty impressive from what I've seen. Anyone mess with it? Oh yeah, no, there's been a lot of people in the community messing with it, and maybe it is, but I don't really see that yet. If anything, I see that, we have yet to see what Google's capable of as far as theirs go, because there's a lot more than just, being a better search engine per se like that. There's also like integration of the search engine and how we go to the day-to-day. But yeah, Unity is very unprofitable last time I checked. Absolutely, it is unprofitable. That's not entirely why we would dismiss a stock. I would say that it would be incorrect to assume that I've only invested historically in profitable companies. But there's a big difference between degenerate unprofitability and kind of where you're mapping out that there is, a lot here, and you're kind of watching the what they're investing in and why it is that they're unprofitable, and kind of understanding why they're unprofitable. But like, it's not a TTCF situation. Yeah, and I would say, yeah, that's right. Andrew's saying something I think was true. We have yet to see what Google's is, and from what we know, Google's is potentially far more advanced. Yeah, I look at Waymo car to meeting today. No driver, just a robot car picked me up and dropped me off. I mean, that's crazy. That's another Google product. I mean, Google's one of my favorite businesses, guys. Obviously, I mean, it's been for a while. But yeah, lots of these companies will perform well at $60 to $70, don't you think? Yes, I do. And that's again why when I kind of revisited the me selling it, like, okay, why did the price continue to roar up a little bit higher? I'm still happy with when I got out because I could deploy the capital elsewhere. But in general, a lot of them, yeah, they're basically going to remain pretty profitable at those prices, and that's going to help them clean up their balance sheets, buy back shares, return capital to shareholders, etc. So, no, absolutely. If they can sustain themselves, which I don't foresee a huge threat unless the demand destruction is enormous, which we would have other problems at that point. I think the last thing you'd be worried about is how your oil stocks are doing, if it's that bad, because there's not really a lot of production in the pipeline. Maybe some companies, but broadly speaking, there's not. So yeah, it looks like this is going to be a better decade than the last for oil companies for sure, but that's not really intelligent to say. Is Google a buy? I can't say that responsibly. I think that, you would have to look for yourself, but I have been adding to Google here and there, just, small slices, but I might be buying a larger position in Google if the time allows. So, Kid Boo, what are your thoughts on DQ? Growth rate is insane compared to its PE. Seems too good to be true. DQ. I haven't looked at DQ. This is where we're going to be wrapping up, everyone. But my goodness, what is this? Oh, Chinese company. I wouldn't be touching this guy. So these ones when they're like this cheap. And let me guess, like the cash pile is like close to the market cap, something like that. So these guys, I mean, the reason why they're so cheap is they're more or less in the risk profile, or they fit within the risk profile that they could do something quite sketchy to foreign investors. It's not like as high profile as Baba. That's an argument a lot of Chinese investors make. Okay, so yeah, with that being said, so any last minute questions? Other than that, I will leave you guys with just basically the last minute commentary. Again, very content with portfolio performance. Should be updated actually, the new numbers because of what happened today. You guys know. Tomorrow will be it will look a lot nicer with the update. Capping on water. Don't worry, I'll drink a lot of water once I'm out of here. But yeah. And as far as the update goes, yeah, no, very, very simple update today. Not much happening. Going forward, what am I looking to acquire? I mean, honestly, it got me interested in looking at or just peeking at Generac a little bit, but not really saying that I'm going to buy. I don't know if I'm even done buying. Maybe I'm done buying for this year, and I'm just gonna sit and let my thesis play out. Because one of my, you could say, investments is doing really well thus far, and also as a percentage of the portfolio is pretty big. ASSA. Oh. I feel like it's not a real stock. Lakers in 4, yes. Phase 2. The joke continues. No driving water on cam. Oh, drinking water. Sorry, drinking water on cam. In your opinion on stocks, I'm buying heavy right now. Would be fun if you have a couple minutes soon. Okay, yeah, I can do that. Bacon. We can do that. It's a Swedish lock company, actually. Interesting. Okay, I think it's because the name. The name intrigues you. So we'll finish off on Bacon Bombs' portfolio, or his acquisition interests. Yeah, it unlocked my heart. Oh, that's funny. And my dad's wallet. Oh, dang. Okay. Okay, so if only Swedish people. Oh, wait. Yeah, because we do. We do have a couple. Oh, you found it? You found the live stream with Tencent and Honeywell? Yeah, that's good, because then I need to post that so, when someone goes, oh, why did he sell these stocks? They can go back to that live stream and see for themselves. No worries, Bacon Bombs. All right, but in that case, there's still next time. I don't know how close you are or whatever. Oh, I have no idea, Andrew. That's what we were gonna question him on, or he wanted to see if we could stay on for a little bit longer. So, but yeah, so kind of concluding or closing thoughts. If you guys have anyone that is really bullish on Alibaba and wants to have that conversation, send them my way, and definitely that can we can make that happen. of course, has to be, they have to consent to it. So, yeah. Okay, 30 seconds. Yeah, we can wait 30 seconds. Never looked into that stock. Never looked into that stock, but that's interesting money. More money is bullish on Alibaba. Yeah, I can probably have a conversation with him because I think he's also bullish on the housing sector or the builders. So it'd be it's a conversation there because I have a couple builders out on the shopping list, but I'm not buying them right now. Thoughts on Markel? I mean, come on, Markel. I'm biased. I love the company. It's not my favorite company on this planet, but I like the company. And Fuhat, was I the one who introduced you to Markel? I don't remember if you told me that I was the one. But last time we discussed thoughts on SWBI, I Love Guns and America. We actually already talked about that, Kethan, but yeah, basically my thoughts haven't changed since the video I made on SWBI. So SQM, let's take a look at SQM because I am not familiar with this ticker off the top of my head. Oh, mining company. Oh, okay, so this is one of the mining companies. So well, they actually just kind of rejected some of the reforms they were doing. So that's actually kind of well, to be honest, in reality, probably the local government's decently corrupted enough that you wouldn't have too much of an issue. But let me see. Yeah, they've still sustained the rally. My goodness. But anyways, not caring too much about the past. They are plant nutrients, lithium, industrial chemicals. Okay, so I kind of get it. You're basically making a play on mining of lithium, lithium-ion batteries, cars, electric cars, where they're going. So the one thing I'd keep track of forever is really trying to make sure that, well, maybe you've done more research than me on this because I'm not a chemist PhD or anything like that, or let's say chemical engineer. I'm not a chemical engineer either. So how are their products necessary? Like, let's say if we make progress on the sodium batteries, because that's still a pipe dream for now, but like just keeping an eye on that because, if we figure it out one day, potentially it could be a very cost and very energy dense also. It could be an issue, maybe. But yeah, and I know that lithium prices are, going astronomically, right? Because there's just not enough and everyone's going into the electric cars. So if that continues, and also, again, like lithium, we already were discussing above earlier in this call about mining operations are not just, oh, they're up and running. No, it takes some time. And there's also political difficulty as well. So you have these incumbent players that have that benefit. So basically, if they're taking advantage of these times, they're probably cleaning up their balance sheet, returning capital to shareholders to see they have a decent, very high dividend there. So benefiting from that. If we don't figure out the battery situation and lithium's all we got, they got a bright future. And your electric cars are just going to get more and more expensive. And that's what's going to happen. Yeah, all those batteries are pipe dreams for the next 5 to 10 years. Yeah, because that's kind of always this discussion, how it goes. It's a potential, but there's nothing tangible right now. We don't see it happening right now, but it could happen. But it's like we're not there yet. So, it's probably disgusting. Yeah, it's probably actually, yeah, that's quarterly right here. Yeah, it's probably disgusting the change. No, yeah, that's ridiculous, and that's 2021. If I probably take a look at 2022, let me just use this website here, and we can probably put it out. SQM. Let me bring you guys back here. 10x their profits. My goodness. Yeah, so like sales just blew up. Yeah, right here. You can see right there. And then let's go to the net income. My goodness. Yeah, I mean, if that is actually a sustainable scenario for them, what's not to like? I mean, they're going to be able to. Let me see how much do they even have debt now, or they've probably just destroyed that debt. Let's move it to the left. Yeah, no, okay, they did a little bit. They paid some of it down, but not really. Okay, they're just basically just returning it all, and it's not even that much debt relative to the size. Yeah, look at that. They're just piling on that cash. Yeah, so their balance sheet went from, pretty good to like excellent in less than a year. Q4 will actually be their best quarter of the year. I mean, man, see, like, I don't know much about the sector per se. Like, I don't know where lithium prices are going to go, but from all that I know, we don't have enough of it. There's not enough coming down the pipeline. Question is, how bad is the demand destruction on that discretionary spend for electric vehicles or other things, other products, that it will translate to, some sort of milder growth in, like, let's say the coming year. Maybe it could still lead to a growth, which is actually the question there. Yeah, no, it's actually, I mean, as far as the mining play, just because the stocks roared up a lot doesn't mean it can't roar up higher if the fundamentals are also moving in the right direction. It's often difficult for investors to buy into something that's gone up so much. Understandably so. I mean, better that behavior than the other one. So I keep tabs on current lithium prices. Q4 spiked the prices by 15 to 20% beyond the second and third quarter. Yeah, I mean, like, there are people that perhaps would have a lot more color on this within the community and saying, bring back buzz cut Fabio. You want buzz cut Fabio or Fabio? So no, not a bad one. Not a bad one at all as far as miners go. I mean, balance sheet looks pretty good. As far as the individual business, you probably had the political risk earlier on throughout the year, but that's gone. And I imagine that's maybe what this rally was. Was that this rally? Or that was probably one of these rallies. Maybe that was this rally. I forget when that happened. Join Strawman and getting a buzz cut? Yeah. No. My wife, she's not too much of a fan of the buzz cut. How was the Christmas party? It was pretty good. Let me see. Bacon, do you know if they have a policy on the dividend? Okay, so every time there was a rally, it was their earnings. Their policy on the dividend, what I mean by that is some of these mining companies, they have a policy like 50% of EBITDA goes out as a dividend, or 50% of net income goes out as a dividend. Some of these companies have dividend policies where it's adaptable. Basically, the more money they make, the more dividends come out. The less money they make, the less dividends come out. And you're kind of at a fluctuation. That'd be good to find out. A lot of these foreign companies, they have that, especially in the mining sector. Like Vale has, I think, 50 or 45% of EBITDA goes out in the form of dividends. I wouldn't necessarily say that's a good thing, but they're also heavily government owned. Even I think Blackstone has a dividend policy. I think it's 85%. So, yeah, unfortunate there are a few poor capitalistic countries still. Yeah, there are a few. It Chile is maybe like the last standing stone there, by the way. Just sold puts on Vale. Yeah, Vale is not one of interest to me as a Brazilian miner. Icon Enterprises, I mean, I'm not too much of a fan of Icon Enterprises, like too excited about it, pays a good dividend. It's a limited partnership, so it's a return of capital. So, look into the tax situation, how that affects you. But Blackstone, big icon, Blackstone. Well, I'm actually, because of community popularity, I'm actually going to be looking at the asset managers pretty closely because a lot of them are being punished. I answered the question, Kitham, about Amazon, and it's okay. It's like I'm not too focused on it, but it looks good. I believe SQM is the largest or second largest lithium miner. So yeah, I think the other one is Albemarle, right? ALB. All right. With that being said, guys, I do have to head out because it is, getting late for me, and I must sleep. I must get my slumber. But with that being said, thank you guys so much for joining me today. If you guys liked it, feel free if you want to leave a like, and then we shall see. All right.
We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.